Hey guys, what's up? Alec back with the daily stock market, and look at that. Individual stocks are green on the day. WBA up 6%, Rivian up 5.8%. However, the S&P 500 and the Nasdaq overall are pretty flat on the day, not moving much. So in this video, we're going to talk about electric vehicle stocks because it seems like that's what you guys really want to hear about the most right now. Stocks like Rivian, stocks like Tesla, and stocks like NIO. We're going to do an update in this video, and we might even touch on Lucid and some other stocks, electric vehicle stocks as well. So make sure you're subscribed on YouTube with post notifications on. Make sure you drop a big thumbs up on this video, specifically on YouTube. And as long as that's done, let's jump right into the video. Now, starting off, let's talk about NIO. By the way, we just talked about Tesla stock in the very last video, the video right before this one. So if you want more of a full Tesla update and that's what you came for, make sure you check out that YouTube video right before this one. But let's go over NIO stock at $9 per share. And they're up 5% in the last week. Remember, they were closer to $8, $7 per share at the end of September, which was a good time to be buying, in my opinion. They're down 15% in the past month, 6% in the past 3 months. They were as high as $15 per share, up 60% from the price of $9 per share. So if they pop up to $50 per share again, that could be another 60% gain on a swing trade, which is what we are looking for on NIO stock. I think there is a probability of them bouncing up to $10 per share. In the last 5 years, the trend has been down, so just be very careful with this stock and know that this is a risky stock. It's down 83% from highs. It's under $10 per share, making it more inherently risky. But we're going to dive into a few things about NIO stock that you definitely don't want to miss. So as we scroll down, we can see that it is a Chinese-based company, by the way. The market cap is $14 billion. And it was closer to $100 billion just a few years ago. We also have a 52-week high of 16 and a PE ratio of negative 4.98, which means that they are a negative earning company and they've never been a positive earning company. Some bullish things to consider on NIO stock: younger generation car buyers value vehicle tech experience, giving NIO leadership compared with legacy car makers. Advancing battery technology and charging solutions will ease range anxiety on electric cars. Chinese consumers' soaring demand for EV cars will benefit NEV cars such as NIO. NIO successfully built its premium brand image, which will differentiate the company from its massive market competitors and generate extra pricing power for the company's electric vehicles. We can see some risks or some bearish things with NIO. NIO's plan to launch a new mass market brand will impair its premium image and dilute the company's focus on the premium NEV segment. Rising competition in the NEV market indices, legacy OEMs will defend their market share with aggressive new model launches. Escalating battery costs in the past 1 year will put NIO's vehicle margins under pressure, which is one of their biggest risks to consider because NIO's, their margins are already negative. So for them to get even worse with this battery cost could be a very negative or a very big risk. It will derail the industry's projection on cost parity of NEVs with ICEs, affecting NEV's adoption in the long run. NEV, by the way, is a neighborhood electric vehicle. Think of it as something that's top speed is a lot lower, something maybe like 30 miles, as low as 30 miles, something more like a golf cart. But in China and Europe and overseas, they are using these NEVs a lot more because they don't have to go too far or too fast like in America. Now, ICE is internal combustion engine, which is just a normal gas car. Here we can see a chart of the EPS on NIO. The last 4 quarters in a row have been all negative. They've been very close to profitability in the past, and a year ago quarter, they were expected to report 13 cents negative on their EPS, which would have put them very close to a positive earning company. At this point, it's getting lower and lower. Their next earnings are expected on November 9th. So it'll be interesting to see if they can work their way higher above negative 30 cents loss on their earnings, or even get back to that negative 25 cents range on their earnings. That'll be a very, very bullish thing to see on NEO. As long as their EPS is not going down, it's going to be bullish in my opinion. Let's see what analysts have to say about NEO stock. On average, they have a 57% upside to around $14 per share. That's where my price target is also. On the high end, they have a $19 price target. But if we scroll down, not many analysts are touching this stock, and it's a lot of 1-star and 2-star analysts. However, we have a 4.5-star analyst with a $15 price target, just reiterated 11 days ago from Bank of America Securities. And just real quick, let's look at their net income and total revenue and balance sheet so we can compare it to some of the other stocks that we're going to be going over on this video. So break out your pen and paper if you have one, or make a note at least. Okay, so for net income, we have negative $14 billion for NEO coming in 2022. If we look at a quarterly graph, that's closer to $4.74 billion 2 quarters ago, and then last quarter was negative $6 billion. So looking extremely rough on net income for NEO. It's not getting any better. It's just getting worse and worse. So we really need to see that turn around. Looking at total revenue, this is where NEO stock shines, but they really need to find a way to get that bottom line better. So we can see the total revenue grows by around 50 to 100% every single year. Most recently with a $49.27 billion year in 2022. If we look at a quarterly chart, that's closer to 16, 10, and 8.7 billion the last 3 quarters in a row, with it continuously shrinking the last 3 quarters. So in November, if we get another shrinkage report lower than 8.7 billion on revenue, that's another red flag and another risk to consider for the stock, which could definitely push it lower in November to around $7 per share once again. The balance sheet is really not good either, with it getting significantly worse just in the last 12 months. Their debt to asset ratio was closer to 61% just a year ago, and now it's closer to 78% debt to asset ratio, which is not good to see those liabilities really creeping up and those assets staying stagnant or, decreasing just a hair, which is not good either. So overall, some huge risks with NEO. Before I add any more money to NEO personally, I want to see how these next few quarters play out. I really want to see that net income getting better, the total revenue also growing again, and their balance sheet getting rid of some of those concerning liabilities and gaining on assets. So let's compare NEO to another Chinese electric vehicle stock. It's going to be another risky one, but they're up 6.5% on Friday. So let's look at what's going on with XPEV, up 10% in the last week. And in the last 3 months, they're up 44% with a 3-month high as $23 per share. So the question is, can they get that high again in the near term? Where will they go from here? Year to date, they're up $73 per share. They were closer to $8, $7 per share in the past, just around 6 months ago. So something like this could happen with NEO, by the way, going up 60% in the next 12 months. There's obviously no guarantees, but let's see what's going on with XPEV and if it makes sense to dollar cost average in, maybe buy some shares, or if we should wait closer to that $8, $7 per share if it could get that low once again. Now we do see that XPEV did IPO in 2020 in August, okay, and it instantly shot up 170% to $64 per share, and it's just been on a downward trend ever since, down around 62% to 70% from all-time highs. We can also see that XPEV is a negative earning company, and if we scroll down, we can actually see that EPS is even worse than NEO's. Well, it's pretty much in the same ballpark as NEO's on the EPS, and they're also reporting in November, but closer to the end of November for their most recent earnings coming out. So let's see some of the bullish things about this stock, and just something to keep in mind. Remember, NEO and XPEV both have to compete with something like Tesla that's already in Shanghai and China. In general, But the good thing is the Chinese government is going to back NIO and XPEV and just Chinese-based electric vehicle makers. They'll be less likely to subsidize and help out an American company like Tesla in China when they can help out their own Chinese companies first. So some bullish things for XPEV, the strategic collaboration of share purchases agreements from Volkswagen Group removes investors' concerns around the company's near-term liquidity. Okay, so saying that they probably won't go bankrupt anytime soon because they have Volkswagen backing them. Chinese consumers' soaring demand for EV cars will benefit any EV car makers such as Xpeng, which is XPEV. Okay, advancing battery technology and charging solutions will ease range anxiety on electric cars and enable EVs to achieve cost parity with gasoline cars in the midterm. So just some quick headlines to go over right now. NIO, Xpeng, and Li Automotive EV deliveries all look solid. I want to read this article, but for some reason it's not loading. So maybe you can look up that article on Barron's on your own time and read it. We also see Xpeng announces vehicle delivery results for September and third quarter 2023. NIO Xpeng stock climbs. Chinese businesses get a regulatory boost, which is another bullish thing to consider. Again, Barron's is not working at the moment, but this one is pretty interesting. We'll go over this one here. Xpeng announces record 15,310 vehicles delivered in September, which is a bullish thing. Needless to say, we'll also look at the revenue numbers in a minute. Xpeng has continued its path forward on strong growth for 8 months now, seeing its deliveries jump by 12% month over month and 81% year over year to 15,000 units in September. G6 deliveries totaled 8,132 units in September, bringing G6 cumulative deliveries to 19,381. Q3 total smart EV deliveries were 40,000 units, up 72% quarter over quarter, and in line with the guidance of 39K to 41K issued during the Q2 results. Now, as far as analysts concerned, there's more downside than upside. Currently, the stock's sitting at $18 per share. They have a 1% upside on average, with analysts as low as $8 per share on the risks. So in my opinion, buying under $10 per share, setting price alerts under $10 per share is one of the best things to do with Xpeng. Just be patient, wait on it, and it probably will go down to those prices once again. We also see something to note. Not many 5-star analysts, and in fact, a lot of them are 1-star, 2-star, and 3-star analysts, giving their 2 cents on XPEV. We have one 4.5-star analyst coming in at $22 per share for XPEV over the next 12 months, and that was just reiterated 12 days ago by that analyst there. Okay, so now we have income statement for XPEV pulled up. Get that sheet of paper out because you have to write down 9.1 billion in net income losses for XPEV, which is extremely embarrassing, and it's just getting worse and worse every single year. If we look at a quarterly graph, it's not getting much better quarter over quarter also. It's around 2.5 billion on average the last 5 quarters in a row of losses. Their total revenue is getting lower as well. And their most recent report did show an uptick quarter over quarter, but the last 4 quarters in a row, it's been going down, which is not a good sign also. Let's look at their yearly total revenue. However, you can see on their yearly, it's even better than NIO, with going up around 200%, 150% year over year on their total revenue. And they're breaking these delivery records, and they're still increasing their deliveries. So there's a good chance that they will continue to increase on their total revenue. It's just the quarterly revenue that we really want to watch and make sure that that is continuing. Now, their balance sheet is looking spectacular with a 45% debt to asset ratio. Okay, on quarter over quarter, it's getting a little bit worse with 51%, but still, it's under 60 on the debt to asset ratio is fantastic, and it's significantly better than NIO's. However, in the next 12 months, there's no guarantee that their debt to asset ratio will stay low. So that's definitely something to keep an eye on for investors of XPEV over the next 12 months. And the last stock that we'll talk about in this video is Rivian, because they're up 5.24% on the day. And again, if you're looking for a Tesla update, check out my video right before this. I do around a 10-minute Tesla update with price predictions and everything in the video right before this one. Also, if you're looking for a Rivian versus Lucid video, I'll link that in the description below. So check out that video. But the winner versus the two was Rivian Automotive. So we're going to talk about Rivian and do an update on Rivian because I like them more than Lucid. They're up 17% in the past week. They've been on a heater. In the last 3 months, they're up 50%. And year to date, they're up 30%. They're still down 77% from their highs and their IPO price. And they went as high as $129 per share in the past. And that was just like 2 years ago. It was at that price. So the trend has been down overall. The question is, can it go lower to around $10 per share once again? Let's go over it because it's last time I made that video was 3 months ago, and it's up 50% if you bought at that time. I made the video at $16 per share. We were talking about it. So congratulations to everyone who was watching back then. We can see that the headquarters is Irvine, California. So this is an American-based electric vehicle stock. One of the biggest competitors to Tesla, because they are a US-based stock. Obviously, Lucid is also, but Rivian is doing better overall, so I choose to talk about them. We can see their PE ratio is better than XPEV and NIO. However, they still are a negative earning company. The market cap is larger at $23 billion for Rivian. And if we scroll down, we can see that their EPS was closer to $1 per share losses. And it's getting better and better, which is a great thing to see. So if we look at their income, the same kind of story going on. It's getting worse and worse and worse over the years at $6.7 billion most recently. The quarter over quarter, it's getting a lot better, especially the last 3 quarters. We went from 1.7 billion losses to 1.3 billion to 1.2 billion. So that's a good thing to see that their track is going in the right direction on their chart for net income. If we go to total revenue, we can also see that it's 1.1 billion in total revenue. So they've had extreme amounts of revenue pouring in, and that's quarterly, by the way. If we go to the annual, we can see it's closer to 1.6. And if you want to look into it yourself, there's a good chance that Amazon did help the total revenue and Rivian company as a whole because they bought a lot of the company. Because not only does Rivian make pickup trucks for, everyday person, but they also make commercial vehicles, okay, for delivery, like delivery trucks for Amazon, for example. If we scroll down, their balance sheet looks spectacular with 32% assets to debt to asset liability. And that's a great thing to see for a company. They're not going in any hot water anytime soon. They're not going bankrupt anytime soon. But if we look at the yearly on their balance sheet, we can see that it went from 16% to 22% just in the last 3 years. So that's not too concerning because their debt to asset is still extremely low. But if they get their debt to asset climbing quarter over quarter, pretty crazy, like from 22 to 29 to 32 to 40 to 50% debt to asset ratios, and even if it grows that much in the next 12 months, that's a little bit concerning for Rivian. We definitely want to see them stop burning so much money on their net income statement and to become a profitable company. But that's the same story for every stock that we talked about in this video. They're very similar. We just want to see, they're all negative earning companies, and we want to see them be positive earning companies. It's that simple. So which one will become the positive earning company? Which one will have a stranglehold on electric vehicles, on even NEVs, and which one will be dominant in China and the US? Okay, my bet's on Tesla, but that's my personal preference. So thank you guys so much for watching, viewing, and subscribing. Leave a big thumbs up on this video if you appreciate this kind of content. Also, share with a friend if they like electric vehicle stocks. Click on success number 9 and check out some positive testimonials from people who join my private trading group. If you want to trade with me, if you're an option trader or a swing trader, I post a lot of content every single day. What strike prices, expiration dates to buy, calls, puts, and everything in between. So click on success number 9, read through some of those for yourself, and just message me here on Instagram at the Daily Stock Market. Now 215,000 followers and 832 posts. Thank you guys for watching till the end, and thank you guys for all the love and support you show on every single video on YouTube and Instagram. I'll see you guys in the next video. Remember, don't time the market, buy the market. Peace.